Hello, everybody. This is Jim Hitt. I'm CEO of American IRA, and I'm with Sean McKay, our Senior Vice President. And it's a pleasure to host our featured speaker today, John Ashford. And we're going to be covering how to build great wealth and turbocharge your 401k with a presentation by John. And we are a third-party administrator for self-directed IRAs, and Nuvision Trust is the custodian for all of your accounts. I founded the company in 2004, and we're over 500 million in assets now and thousands of clients. I think one of the key components is we have a very consumer-friendly fee schedule, and we treat all of our clients like you'd be treated at your local bank. And of course, we specialize in the self-directed retirement plans. Plus Retirement is a subsidiary of American IRA, and we set this company up so that our clients who had requested a more robust 401k option to be able to offer to their employees, and also many of them didn't have the ability to get solo K, which we've been doing for years. So this plan allows you to have the benefits and the power of a 401k inside your existing business, your existing plan, or to set up a new plan. And that's why it's so exciting to have John here to explain how this is all going to work.
Thank you, Jim. Everybody, extremely happy to be here. I won't bore you with all the details of what I've been through all the years, but I was a RIA for 23 years, and I've worked primarily with small businesses. That was my market, handling 401ks and some other plans that we'll discuss a little bit later. I'm thrilled to be here, and thank you so much for attending. I've been in the technical side for the last, I guess, 8 years. I know it sounds like I'm only I started when I was 10, just kidding. I've been around a while and have vast experience in the retirement arena. Happy to be with Jim and Plus Retirement, and to be a subsidiary of American IRA. What we're going to cover today, Jim mentioned, we're just going to talk about the advantages to having a 401k, but also for a small employer, what they can do, what you guys can do in order to have a plan and to maximize it, and how we can help you kind of walk through step by step in maximizing what your goals are. And this, what you see now is just the contribution limits for a 401k. And every year the IRS, cost of living, they'll increase the 401k limits. And as you can see, for this one, for example, the employee deferral, it changed from 2019 to 20 to 19,500. But if you're lucky enough to be age 50 or more, you can put in an additional $6,500. So quite significant difference there. Someone can max out once they reach 50 or older. And then we have some other sources down. It's a defined contribution maximum, which shows a combination of 57,000. And then if you combine and have, if you're over 50, you can put in that additional amount, which equals 62,500. So just showing, well, that's called a catch-up provision. And again, this is just every year it's modified by the IRS for cost of living. I said at Plus Retirement, we kind of pride ourselves to being your turnkey platform, if you will. And what I mean by that is not every business is the same. And so we kind of pride ourselves to tailor and customize to the needs of your company and employees. And that goes into plan design and consulting. For example, if you're a small business, and let's say you have 2 employees, obviously your needs are different than if you have 1,000 employees. And plan design is key. You might want to maximize how much you can put in. Because one thing I did when I was an RIA is mainly to make sure that not only we're doing the design right, but you're able to attract and retain, but also building the plan right. And it's really important to consult in that regard. And in mention of the turnkey, we also offer record keeping and administration. So what does that mean? The record keeping piece is keeping up with the assets and how the 401k is building and administering the plan, sending out the notices, compliance oversight, which is just keeping everything in order from an IRS perspective, and things like the website, that would go into record keeping. The compliance would be like the 6500, which means that we do all that. It's just the testing piece of it. The fiduciary support, which is like the governance of the plan, the prudence of the plan, making sure that everything's followed. The participant communications. I'm going to get into these in a little more detail in later slides. And then the education and guidance, which again is key. It's so key because again, having a 401k is a big deal. And a lot of times, the 401k, it was, thinking back to the past, and I'll talk about this a little bit more later, but if you think back, I know we have probably diverse demographics here, but it used to be, at least when my parents were working, the defined benefit plan, the old pension plan was in place. And since then, a lot of it became unaffordable because of some of the laws. And so a lot of companies now are offered a 401k. And this came out like in the late 70s, early 80s, where it became prominent. And basically, the 401k is a retirement savings plan or program, if you will, sponsored by an employer. And it lets workers save and invest a piece of the paycheck. And it's before taxes are taken out. So taxes are, the plan grows tax deferred until the money's withdrawn. And there are basically two kinds of investments, or not investments, but two different types of money that can go into it. And it can go in like this, which would be after tax, or I guess it was the 90s they put out, or early 2000s, the Roth provision, where it can go in after tax. And what that means is the money goes in after tax, and then when you withdraw it, it's also isn't taxed, the growth. So what that means is you're not able to take the deduction up front, but it's kind of like you would rather have the seed of the harvest. And so it really depends on your age and your income if that's applicable. And a lot of times when I was an RIA, and even now, a small business a lot of times has all their money tied up in their business. And one thing I always preach is diversification, and not just in your investments, but also in what you own is key, and not having all in one basket, if you will. And last thing with the 401k is it also allows for the employer to contribute and match. So that's a key component. Some of the advantages, I've already mentioned a few, but the ability to borrow from a plan is key. And what that means under certain circumstances is, first off, you have to have it built in. You don't have to have the loan provision built in, but if you do, there's certain guidelines. For example, a minimum of $1,000. You can only borrow 50% and so on. There's also, I mentioned the Roth. There's tax-free withdrawals for qualified distributions from Roths, but there are some provisions there. You have to be in the plan for 5 years, at least, contributing to the Roth, and when you reach 59 and a half, that's when you can start withdrawing. Also, the tax-deferred contributions in the traditional 401k, they are deferred, and so you don't pay taxes on it until you withdraw. And I already mentioned some of this, but the potential for employer matching contribution and the choice among different asset classes and investment vehicles, and including which we're going to talk about towards the end, direct ownership of alternate assets. The benefits again for a small business 401k, again I mentioned diversifying your assets as far as a business owner. But having said that, the government has implemented some tax credits because, obviously they want to have employees to be able to put money away and encourage employers to offer. So there is a credit that's available for less than 100 employees, and it's up to 50% of the cost up to 3 years for $500 a year that you can actually take a credit for, and that helps offset the costs for the startup plan and also the ongoing costs. They're obviously, the analogy I used to use when I was an RIA, and I still do, is obviously there are a few different reasons for having them offer a 401k. And again, I mentioned one, it's diversifying, but also it's, being able to put money away for the employer in the highly comp. But on the other end of that is attracting and retaining key employees. And, most of the times it's a combination of the two, but in some cases, especially a small business, it's able to diversify and getting money to the highly comp. And that a 401k set up right allows that, and that's what we help with. Again, the tax deduction for plan expenses is tax deductible for the plan business owner. There's an efficient process that we work with whoever's in charge of payroll, helping it be practically automated, and making sure the money is transferred over appropriately. And then this is key. Again, it's not just attracting and retaining, but while you have employees at work, it's helping them with that, because you don't want them thinking about, how am I going to have enough money for retirement while they're working? You want them to focus on their job while they're there. And so this helps with that and the morale and business costs, and help them retire a retired date at their desired retirement date. What we do as Plus Retirement is we realize that that every business is not just a one-size-fits-all, and we can't just plug in a solution for that. So we customize. And I know you've probably heard or seen the commercial, and I'm not going to name names, for the green line. If you follow down this green line and don't go outside the box, then everything will work perfectly. But not everybody fits in that category, and in fact, most folks don't. So what we do and pride ourselves is in customization. And we sit down, or we talk about your goals and desires and what you want to accomplish, and we help with that. With our platform, we totally open architect, and what it means is we have, as far as investment lineup, it's wide open, totally open architect. You can implement models. We can help you with that. Employer stock can be included, and we'll talk about that a little bit later. Through our solution, we can accommodate trust and a custodial platform. And it really just depends on your level of involvement. You can be as involved as you want to be, or not. But we'll make sure you get the information that you need and make sure it's all compliant when it's submitted, which is important. And these acronyms may not mean much. They're IRS codes, 338 and 321, and all that means is dealing with the plan itself and the amount of involvement that you want and how you want us to serve. And we can help with that going through. And we also offer Trustee Services. Now, I think this really is the exciting part that caught my attention back when I was an advisor, but also when I became more on the technical side, kind of understanding this piece of it even more. And in adding to the 401k, that let's just say you implement a 401k and you have it available, and let's just say you have a small business where there's 2 or 3 employees. I have some slides I'll show in a minute, some examples. You might be able to put a lot of money away in your 401k, and some examples I showed earlier, 62.5, 63.5 if you're 50 or over, and so on, the maximum. What this allows is for a small business owner and the highly comp to be able to equate to what they're actually earning. And this is a combination, hybrid of what I talked about a minute ago, the defined benefit with a defined contribution, i.e. a 401k. It kind of takes a combination and creates, and I'll just read it to you here. It's a plan, it's an individual account for each covered employee, completed with a lump sum, which is awarded upon reaching retirement. So what that means is it's not just based on how much you decide to put in. It's based on your age. It's based on your classification. It's based on your salary. And there's a lot of factors that go into it. But it also, what it does is it allows you to create a plan where percentage-wise you're equal to, what you're earning when you want to retire. You can put a lot of money into it, and also it's a huge tax play, which I'm going to show some examples in a minute of how that works. But you need to have it. Also, I want to mention it is important that you have it. It only works with a 401k with the safe, what's called the safe harbor element, which just means it doesn't have all the testing that's involved, and you're committed to contributing only 3% to the employees from a profit sharing perspective. And we'll talk about that in these examples just a minute ago. This is just an example, and it's pretty broad here. You can kind of see if you're at a certain age, the maximum. This doesn't mean what you have to contribute. This is what you can contribute with the right demographics in your plan. This just shows, let's just pick one for example. Let's take a 55-year-old where you're putting in, you're deferring $26,000 actually from an employee perspective. And then with the profit sharing, you're able to put in $63,500, but you combine the cash balance piece with it. Again, that defined benefit I mentioned earlier is $218,000. So now you're up to $281,500. And again, you put this money in, and it again is tax deferred, and it's huge on saving taxes for yourself, for the company. And I've got some live examples here. I got just a couple of three kind of go over on a high level perspective. This is a case, as an actual case, that the goal, again, we sit down, we talk about your goals, because not everybody's goal is the same. The goal here was to maximize contribution. And again, it's huge on the tax deduction play. So you have a small business owner, 52, as an S Corp, it's a solo practice, and they already have a 401k, we'll just say they do here, and he wants to grow retirement assets quickly and reduce his tax liabilities. You can see his income is $302 in W-2, and he's hired us to build this plan for him, and he's looking at 10 years out to combine with a 401k. So you can see here with the combination that in the defined benefit only, they can put in $202,400, but there's a tax savings there, yes, it's $74,800, but you flip it and you combine the 401k piece with it, and now you tack on an additional $42,100, so now you're at $245,500, and you've got a tax savings of $90,800. And case study 2, go ahead, Jim.
Well, John, the way I look at that, and I know that the clients are going to look at it, is that $90,000 is reducing my contribution down to $155,000. So the government's picking up 37% of my contribution as a small business owner, and it kind of goes down that whole laundry list of the examples, all the way down to 30 years old, what a person can put away for their retirement. So I just wanted to add that commentary in. Thanks, John.
Yeah, thank you, Jim. Great point. And again, Jim's point, that savings can offset the employee contribution, or not an employee in this case, but the contribution that you make. So it's huge. This again is a case study. Again, to maximize employer owner contribution and tax savings while controlling costs. benefits for employees. Because again, you want to make it a win-win. You want to be able to contribute to employees, but you don't want to drive yourself out of business. So in this instance, for example, the dentist here is using professional service. It's 53, pays himself $285,000, and is willing to make contributions for employees, but wants to receive the lion's share. Again, they hired us to build it and to administer it. You can see the example here. If you go down and scan down to the bottom there, the total contribution is $228,000. That's total. But you look up and you go, well, the total contribution to the doctor, the highly comp, is $215,200. So how does that break down? Well, the cash balance is $188,200. Then you add the safe harbor and then the salary deferral. So when you go down and you look, the estimated tax savings is $84,430. That highly comp, that owner receives basically 94% of the contribution, the total contribution to his or her plan.
Hey, John,
Yes.
over the years, when we're talking to clients about small business plans, many of them are sometimes hesitant to get too involved with making large contributions and for the employee for whatever reason. But like you say, don't want to drive themselves out of business. But the way I look at this one, just from a personal perspective, is I'm putting away $16,000 for my employees, and the government's picking up $84,000. So it's costing me $68,000. Excuse me, I'm still saving $68,000 on this overall plan. So it's literally costing me nothing. What are what's your experience with people that, you're setting these up for?
That's exactly right. And once that's pointed out, and it's basically shifting over the dollars and the costs, and you look at the tax savings, that money's going to go somewhere. It's going to go, if it doesn't, it's going to go to the IRS otherwise. And in this case, you're leveraging that money and able to put it towards your benefit, but also utilizing it for your employees. So it's a win-win. Again, I want to emphasize, this isn't right for everybody, but that's what we do. We help kind of gauge that. And again, it's Jim's point. You want to make sure you don't drive yourself. The lion's share, in this case, is towards the business owner. So good point, Jim. Thank you.
Thanks, John.
Yep. This is kind of our service model. I won't really get in the weeds on this, but I will say that our big thing is making sure we have a model and the way it operates. And obviously, our breakdown that shows on the screen. We have a very dedicated service team, a client service manager who's our day-to-day person that is assigned to a particular client, and that's important, because when someone calls and is speaking to someone about the situation, meaning a participant or employer, they get the same person, and they know their story. You don't have to reinvent the wheel each time. And our main focus, our client service specialist, is plan focus. And we have a very integrated approach to that with specialized support teams. So different areas, all the way from marketing, sales, operation, processing, client service team, conversions. What that means is if someone comes to us and has a plan and wants to move it over to us, there's a conversion process. And we have a team that helps with that. Everybody's involved, including the science service manager, so it's handed over smoothly. And the last piece of that is the plan document, the compliance piece of it, which is what we call a third-party administration part. Again, that has to do with the design piece also. And this is kind of a deeper dive into the client service overview. So there's a dedicated service representative and it has a team backup. Obviously, if somebody's out on vacation or sick, we have folks that can hand it off to. We pride ourselves on record keeping excellence. Plan level experience is measured. And, again, we embrace the client. So we want to make sure we're satisfying the client. And through that, we have a collaborative management approach with measured success and encourage employee engagement. So I guess what I want to emphasize here is communication is paramount in any aspect, whether you're raising kids or running a business, and that's the way we consider ourselves is communication is key. Again, participant and plan sponsor experience is extremely important, the most important thing. So we have our own dedicated website, again, which each plan sponsor will have, and of course it's password protected. You go to it and you can see your information. The plan sponsor can see and measure the employees and what's going in, and everything is available. I have a few slides that will show that in a minute. We also have a bilingual support participant service center that someone can call in. And I would like to say this should be, I shouldn't even have to say this, but believe it or not, there's still a lot of companies out there that don't offer, but we have a compliant, it's not the right word, but where someone can log in with their phone, their smartphone, their notepad, and it looks and it adjusts to that. And so we have an app that they can log on to and actually enroll and do anything they can do on the computer. Again, their own participant call center with a Spanish option and a bilingual participant call center. And it's open from 8 a.m. to 8 p.m. Eastern, Monday to Friday. We have a very extensive communication piece that will help someone with the login instructions. I have help videos that are available that'll help them, whatever part they're trying to do, whether it's logging in or enroll or looking at their investment options and trying to help them make decisions. We have, of course, enrollment materials. We have what's called a smart plan outreach, and that's a whole nother conversation. If anyone ever wants to see that, just let me know. That's an offline conversation. But what that does is that we'll get into the details, explaining what different investments are specific to their plan, kind of explaining what a mutual fund is, what a stock is, equities versus bonds, on and on and on. It gets into great detail, and it can be customized. Also, e-statements, of course, are available, but also a participant can go on and look at something live and see what actually their plan, their investment is doing at closing of 4 p.m. the previous day. And then also annual notices go out, which is mainly a compliant issue. We make sure those are done efficiently and timely. And this is just a diagram showing participant communication. And this is customized, by the way, for each client. And so this is just an example. In January, a quarter statement notification is sent out. February, retirement goals are gone over. Our goal here is, by the way, this is customized to each plan, but our goal is to get that employee engagement. Because let's face it, I mean, it's, having a 401k plan is it's a little bit of work, and we want to make sure the employee understands what's available to them, but also that they're maximizing and reaching their goals. So this is kind of outlining that. It goes through a process of 12 months. Again, I spoke a minute ago about the Smart Plan education. It's video-based. It's brandable. It shows how they can roll on the line. You can do it from a computer, tablet, or phone, friendly. you can use it as an employer, as an introductory campaign if you wanted to. You don't have to. And it also has quarterly emails, and what it encourages and helps with is higher usage and deferrals. And this is a slide just showing our partner and sponsor experience. So again, website driven here, participant plan and book level inquiry reporting. And this is more from a plan sponsor perspective. Secure file exchange. So everything's encrypted because you're dealing with confidential information. Participant draw and pass through login as participant. Annual management reports, transactional output reports and email confirmations, reports on demand. So if you want to report and you want it to go out, at that moment, you can pull it up and it'll send it out in an Excel if that's the way you want it, or PDF. Also, automated report scheduling. So now we're going to talk about some unique features that American IRA already does, but also can be done in your 401k. And I guess I'm going to turn it over to Sean now. Sean?
Great. Thanks so much, John. And as John mentioned, we really appreciate everyone taking time out of what I'm sure are very busy schedules to spend a little bit of time with us. And so we brought in the big guns to talk about the technicals and kind of these interesting services that Plus Retirement and John can assist you with. And now it's kind of the fun part where we get to discuss what these 401k products can actually do that, as John said, is so unique in the financial services space. You're really not going to be able to go out there and find this full-blown 401k product that can invest in these alternative assets unless you're working with Plus Retirement. So as many of you are already aware, these retirement accounts have the ability not only to invest in securities such as stocks, bonds, and mutual funds, but a huge array of alternative assets as well. Because interestingly enough, the way the IRS code is written is it actually just simply tells us what we cannot invest in, which is essentially just collectibles, life insurance policies, and investments into S-Corps. So as you look at that, these are some of the most popular investments that we see from clients, but by no means is this a complete list of how you can utilize these 401ks. So for those of you that are real estate investors, real estate entrepreneurs, there's a lot of different ways that we can invest in the real estate asset class. So we can be purchasing anything from raw land to condos or townhouses, single family homes, commercial buildings, industrial buildings, apartment complexes, retail spaces, you name it, these 401ks can actually directly own those assets. Now, what we also find is that a lot of the time, especially with the larger scale investments like an apartment complex, sometimes your 401k might be one of many investors that's investing in that apartment complex, for example. So what typically happens is that the 401k is going to be one of many members of an LLC, and then that LLC will then go on to make the acquisition of the asset. So for those of you that may have heard about checkbook control or an IRA or 401k owned LLC, that's certainly something that you can utilize throughout these brands of companies, if you will, with Plus Retirement and American IRA. And so kind of sticking with that real estate theme, there are a lot of clients that just simply want to be the bank and lend money to other real estate investors. So that can be accomplished depending upon the state that you're investing in, either with a deed of trust or a mortgage to secure your monies. Technically speaking, you can make loans to businesses or investors with unsecured notes. Obviously, as the name indicates, it's unsecured, so there's kind of a wide array of outcomes there in terms of how that plays out. But there's also the ability to invest in what a lot of our clients deem to be as hard assets that are kind of a hedge against inflation. So some of our clients are interested in precious metals, such as gold and silver. We're also starting to see an influx of investors looking at digital assets, such as Bitcoin, Ethereum, opportunities such as that. And really what we're seeing a huge trend over the last couple of years is investments into privately held companies as well. So we're all familiar with these large publicly traded companies, the AT&Ts of the world, Apples, Exxons, but there's also the opportunity to invest with perhaps entrepreneurs in your own community that are either starting a new business or they're looking to take their existing business to the next level. And so that can be done by investing in privately held companies as well. So when you dig really deeply into the real estate asset class, certainly that's a favorite of many of our clients. Really the key is that you're making an investment into real estate with your IRA or 401k. So for those of you that are interested in something such as rental properties or doing a fix and flip deal, your 401k can actually own the property and it's utilized to collect rent or to make a chunk of profit from doing that fix and flip. And those that are actually doing off-market deals where maybe there's not realtors involved, but you're able to get a little bit creative with the terms if you're dealing directly with the seller of a piece of real estate. A lot of you tend to be pretty transactional and use some creative techniques, such as putting an option on a property or wholesaling a deal. Those tools can also be utilized with your retirement account. So there's a lot of opportunities available to us strategies-wise. As I mentioned, really the key is that we're not using our IRA or 401k to purchase a primary residence for ourselves or for our family, or to purchase a secondary home that we're going to utilize for vacations and things like that. There needs to be a pure investment type of strategy when we're making these acquisitions. So we're just going to run through kind of a really basic example of how a client can utilize these 401ks to actually purchase a rental property so that you get kind of the feel of what that looks like, what that entails, and what a client profile might look like. So for me, I look at our clients and I look at 401k investors that are using alternative assets falling into usually one of two general categories. There are the clients that we have that I consider kind of asset class experts, where maybe they've built a large portfolio of rental properties, maybe they're builders, they do a lot of fix and flips, and so they're going to be all in on these alternative assets, and they're heavily weighted and invested in those. But then we also have another group of clients that are, as John mentioned, they're really looking for extreme diversification. They really want to make sure that all of their assets are not tied into the stock market bucket, if you will. And so they're looking to perhaps keep a portion of their portfolio with their current providers, but maybe just simply move a portion of that to these alternative assets so that they can do something that's not correlated to the ebbs and flows of the stock market. So really, especially as we look at this kind of wild year that we've all experienced in 2020, there's been a lot of ups and downs in the stock market. But oddly enough, at least to this point, at least the metropolitan areas that we follow, the real estate market has actually been pretty consistent. We've seen actually a little bit of an uptick in terms of appreciation. So those to this point have not been highly correlated assets with the stock market and with the real estate market. So this is just a brief profile of a client that we'll see on a daily basis wanting to use their IRA or 401k to make a real estate investment. But as you'll see, we're not looking for pie in the sky kind of extreme rates of return. These are investments that we can all make. And so when you look at full-time Frank, he's like many of us. He works his 60 plus hours a week. He's got his family, his job obligations, and he's seen that statistically, a lot of individuals have created wealth by investing in real estate. And so he wants to have at least a portion of his 401k that is involved in that asset class so that he has a better chance of creating some really significant wealth. And so ultimately, the deal points are that he's simply going to work with a realtor to find a property that's listed on the MLS. So again, these are properties that we can all find when working with professionals. And his 401k is just simply going to make a cash purchase. And all in, the purchase and the rehab will cost about $120,000, and the rent that will be received after the property is rehabbed is $1,000 a month. Now, just based on just a very rough cash flow analysis, many times you get to essentially analyze that half of the gross rent will be utilized for the operating expenses. So that's everything from the taxes, insurance, management, maintenance, vacancy of that property. And so with $1,000 in rent, there's roughly about $500 a month in cash flow to the 401k. Now, certainly if the 401k decides to get a mortgage, then the mortgage payment of principal and interest will need to be paid out of this net income of $500. But again, in this situation, Frank is just simply making a cash acquisition with his 401k. So when you think about the strategies to purchase an asset, in my mind, there's really three general acquisition strategies that we can consider for these investments. So the first option is when the IRA or 401k is simply going to make a cash purchase of a rental property, just like we saw with Full-Time Frank. The second opportunity is when an IRA or 401k is going to do a joint venture. They're essentially going to partner, maybe it's just simply with one other investor or a group of investors. And those other investors could be other retirement accounts, they could be individuals or companies, but as a group, they're going to get together to make the acquisition either of a single family house or an apartment complex, whatever seems appropriate. The third concept is where the IRA or 401k is actually going to use leverage. So as I just alluded to, the IRAs and 401ks can actually borrow money for the acquisition of an asset that is going to be income producing, such as a rental property. Now, there is certainly a discussion to be had in terms of the pros and the cons of using leverage. The 401ks are fantastic vehicles, and many times they can be more tax beneficial when you're deciding whether that's appropriate or a good idea. Certainly, it's always a good idea to speak with your tax and legal professionals about the potential for tax ramifications. What I will mention in this presentation is that if you're looking to utilize leverage, utilize a mortgage, you're going to need to make sure that your 401k is getting a specific type of loan, what we call a non-recourse loan. So that means that you as the account holder are not personally guaranteeing this loan. It's essentially what we would consider an asset-based loan. So the lender understands if the 401k is unable to perform and make the mortgage payments, the only thing they can do is simply foreclose and take that asset back. It's not going to sue the retirement account, you personally. It's an asset-based loan. So for me, I'm certainly much more of a visual guy. And so when I think about these retirement accounts, the key is to understand that these retirement accounts are by definition trust accounts. So they are completely separate legal entities than ourselves personally or any sort of entities like LLCs that we own or control. So the IRA or 401k is going to pay for the asset. So in this case, it could be a single family house. And then that house is going to hopefully produce some sort of income in terms of renting the property or a fix and flip where there's profit made at the end of the exit of that property. And the cash flow or that chunk of cash will flow back to the retirement account, not to you as an individual, because again, that IRA or 401k is going on title. It is the actual legal owner of the asset. So I really, really appreciate everyone's time here today. Again, obviously we had the heavy hitters with us, so it's nice to get some real brain power behind these webinars that we do at American IRA. So we do want to open it up for questions. Presumably, many of you are going to want to speak directly with John, whether it's via phone, email, to discuss your personal situation. So we appreciate that that's the way that this flows most of the time. But again, we do have our contact information up here. And again, obviously, this webinar was really built for Plus Retirement and John Ashford to share his vast knowledge with us. So you can reach John. It's John, John, at plusretirement.com. And the phone number is 828-417-3347. Toll free, that's 866-525+, which is 7587. So we'll give everyone a moment or two just to see if there are any questions on the live webinar. Jim and John, any final thoughts?
Yeah, Sean, that was phenomenal, and thank you, John. I do have a couple of final thoughts. I'd just like to, offer an overview. With a traditional 401k where you have employees, the ability to invest in alternatives is not exclusive, meaning that you can invest in alternatives, your employees can invest in security, invest in alternatives, but it does give you the ability as the entrepreneur owner assets while still offering your employees the opportunity to invest in mutual funds that they might be more familiar with. So it gives you a wide range of opportunities for both you and your employees. And that, I think, is how it ties together with Plus Retirement and American IRA by offering both components. As John mentioned, so that you have the flexibility to invest and to build your wealth, like the
Absolutely. And Jim, apologies, I'm not sure if this is happening for everyone, but at least on my end, you're cutting out a little bit. So sorry for that. But Jim makes a phenomenal point that with Plus Retirement and the services that John can provide, really what you're getting is the best of all worlds. You're getting this full, complete 401k concept with the ability to invest certainly in the securities-based world and a lot of fantastic products there. And then also, if it's interesting and appropriate, to invest in these alternative assets as well. John, any thoughts?
Thank you,
Sean. No, I think we covered a lot, and Sean, that's great. Thank you so much for adding things that I couldn't add for sure. It's a pleasure to be here today and to give my 2 cents. As I mentioned, as Sean mentioned, this was a brief overview, and I encourage anybody, even remotely interested, to reach out. I'd love to have an offline conversation.
Terrific. Yeah, and as John mentioned a number of times, there's a lot of moving parts to these 401ks and the services that he can provide at Plus Retirement. And so really the questions that we're rolling in are questions around the idea of fees and kind of specifics for their situation. So as John mentioned, certainly these offline conversations are going to be incredibly helpful. Certainly a lot of the listeners are current clients at American IRA, where it's I guess you could say, a bit more of a straightforward, fundamental, basic product with basic fees, because there's just less components to it. So please feel free to reach out to John. Fantastic resource, as he said, decades in financial services as an RIA, being deep in the weeds with plans and what have you. So it doesn't get much better than a resource like that to have a conversation with and see if there's an opportunity there. So if there's no other further thoughts, again, we'll just kind of sign off. Thank everyone again for their time and questions and thoughts. And certainly feel free to reach out to John. And hopefully we'll see you at another webinar, and hopefully at some time in the future, another live event soon.